Hello, I'm Molly, a licensed insolvency practitioner at Parker Walsh. So what happens if you don't pay your company tax bill? So first of all, we're going to look at what is a company tax bill. And essentially that is money owed to HMRC for VAT, pay-as-you-earn or corporation tax. If your turnover is 85,000 or above, then you have to be registered for VAT and that goes on your invoice, or you may have elected to be VAT registered. So every invoice that you raise, there should be the VAT element on there, and that is due to HMRC. You can offset against the VAT reclaimable. Then if you have any employees, then you will be paying pay-as-you-earn and national insurance. That can also be due if you're an employee as well as a director. So you can be a director and you can also be an employee, most likely taking out minimum wage and the rest is dividend, but you'll owe pay as you earn on that minimum wage. And then if your company makes a profit, you will owe HMRC corporation tax, and you have to pay these across to HMRC. It's not optional. If you fall behind with your repayments, you need to communicate with HMRC and explain the situation. It may be that you enter into a time to pay arrangement to work off any backlog of liability that's accrued over time. But failing that, if you don't communicate with HMRC and you're just not paying the money as and when it's falling due, or if you fail to adhere to any time to pay arrangement, essentially HMRC will petition to wind the company up. That's a compulsory liquidation through the court and you want to avoid it at all costs. You may be communicating with HMRC, offering payment plans, and they're saying no, and then it may go quiet and you think, oh, they've forgotten about me. Great, I've got a bit of breathing space. That's lovely. I've got a break here. What you will find is that they've become frustrated. They don't see a possibility of entering into a repayment plan that you're going to stick to, and they won't tell you, but they will have transferred it to their legal department and they'll be gearing up to wind the company up, and that would look like possibly a statutory demand, or they might go for a winding up petition, which is served on the registered office, and eventually there will be a hearing at the courts, and that is where a judge would say no, the company has to go into compulsory liquidation. And before that hearing, the hearing will be advertised in the London Gazette, and you might be thinking people don't read that. Well, the banks do, and they will freeze your bank account, which will stop you from trading. So you want to avoid all of that. It's not good for HMRC, it's not good for you, it's not good for the company, your employees, your creditors. We want to avoid that situation. So if you're falling behind with your HMRC liability, that could be for VAT, pay-as-you-earn, corporation tax, you need to get in touch with someone like myself and we can help you there. And we can either liaise with HMRC in regards to negotiating a reasonable repayment plan, or it might be that you need an insolvency option and to get rid of that liability, but get in touch with someone like myself. And then in regards to your personal liability to HMRC, personal tax, and that might be from income that you've taken from the company can't pay that. That's your personal tax and you have to pay it, and that's outside of the arrangement. Okay, so if you've got any questions, please get in touch. Thank you.